Morning, everybody. This is Brian Lysing with Financial Brokerage, and welcome to this morning's webinar on the Ensight proposal visualization software. I'm going to keep this to about 20 minutes or so at the most, so you can get back to finding prospects and writing business. But joining us this morning, we have Cody Ortiz from the company Assurance. And that is the company that has produced and maintains this software that we have a subscription to. And Cody's available here to help me out if I get stuck somewhere along the way, maybe add some additional insight and also assist with some questions at the end. But
perfect. Thanks.
What are we going to? Yep, appreciate you having you here this morning, Cody. And just to give you a brief overview of what's going to happen here this morning, what are we going to cover? I want to give everybody an idea of how this system works, what it looks like, and we're going to do that by going through some specific sales concepts that I think you're going to want to use in real life with real clients. Now, why are we doing this? Why is Financial Brokerage paying to have this software available for all of you to present to your clients? Well, look, we know that sometimes you have to show illustrations to your clients because of compliance reasons. Clients have to sign off on it, or sometimes it just makes sense to do that. Now, the problem is, though, illustrations are really boring and they're confusing. I mean, for some of us, we have questions looking through it. Imagine what the general consumer off the street thinks when they're faced with 30 pages of verbiage that an attorney put together. And then you get to the ledger lines that the actuaries love that stuff. But, I mean, most folks, wonder what all the different columns mean, and it's confusing. And then you make the problem worse if you're showing more than one. And if there are multiple companies, now the ledger lines, they're not in the same font size. The lines don't line up exactly. It's really tough to try to figure out what's what. So rather than make consumers look through all these lines of numbers that just confuses them, the Ensight software will take all that and turn it into a picture, because we know people can learn very, very quickly through pictures. I give you an example. If you're driving down the street, I guarantee you, if they took the words S-T-O-P off of a stop sign, you would still recognize that as a stop sign without the words on there. You would recognize the shape and the color, and you would know exactly what to do without even thinking about it. So that's what I think of the software as. It's sort of like the stop sign or the traffic sign without all the verbiage in there. Now, that's still there if you want to get to it, but people can learn and understand things very, very quickly with the picture. And, this software makes it easier to show the value inside of permanent life insurance policy. It's not just the price. Term insurance, oftentimes it is just the price, right? But with the permanent plan, it's a lot different, and the cash value plays a large role in that. And that's really one of the tough things about life insurance. It's an intangible good. You can't see it. Well, this helps you see it and visualize what's really happening there. And all of these concepts that we'll cover, and there's 5 of them, they should help lead you to selling more permanent life insurance and larger premium dollars for the cases that you're going to sell anyway. I mean, let's face it, it takes just as much effort on your part to fill out a $20 a month application as it does a $20,000 a year application. So let's see what we can do to help you get more towards that $20,000 a year end of things. And before I show the actual stuff too, one more thing, I should probably explain how you can get to this and how the whole system works behind the scenes. So this proposal software works with permanent life insurance products that are within the WinFlex Web software. Many of you have accounts with WinFlex Web already. That's fantastic. Most of our top carriers use that as their software platform. So if it's in WinFlex and it's a permanent plan, we can extract that out into the Ensight visualization presentation. Now, for right now, we run it here internally at Financial Brokerage. Myself, Gary Peterson, and Dave Stork have access to that, and we can then share that presentation with you. You can then use that however you want, and I'll show you some things that you can do with it. You can share that with the client live in your office on the computer. You can run a go-to-meeting with them and share it with them virtually and walk them through it. If you wanted to come up with your own, right now you'd have to pay the fee for your own subscription. But we can produce that all in-house and share it with you for the select clients where you think it might work. All right, so all of that being said, I'm going to jump into this here. I've got 5 pre-made presentations that I'm going to review here. I'm going to switch this over to presentation view. And we're going to start off with a concept here. Actually, before I jump into the concept, you should be able to see this on the screen. This is what the presentation is going to look like. We're able to load or display up to 4 different illustrations at the top of the screen here. They don't all have to be different carriers. It could be the same carrier. It could be different products. It could all be the same product run a different way. But this is sort of the main screen that you're going to be sharing with your clients. And you can see here you can move the mouse around and stop on any age that you want for the client. And up top, it's going to display the numbers based on that particular age. Now, if you want to, you can go down here to the bottom, and over towards the right is the PDF of the original illustration that was put together. And I'm not going to do that right now, but you can click on it, and it's going to be the illustration that you're used to seeing. All right, so that's how it works in general. This example here, and I'm going to start with here because so many of you, when you sell permanent life insurance, it's a GUL, a no-lapse guarantee universal life contract. And a lot of these, they provide great value to the client, gives them permanent coverage for as long as they live, or as long as they think they're going to live, for a low price, a price that's usually about 1/3 the cost of a comparable whole life contract. Well, the problem with most GULs, though, is that they have no cash. And so that means the clients have absolutely no options down the road. If a better product comes along and they want a 1035 exchange some of that money into the new thing, there's really nothing there. Or maybe the industry comes up with something entirely different and new. You really don't have any options if you don't have any cash. Or maybe their situation changes. They don't need all the coverage. Maybe they could use some cash. Lots of things can come up. So one of the things that you might want to share with your clients would be this scenario here where I ran a 40-year-old male. I think he was preferred in this case. And let's see if I can tell you what the death benefit was here. Over on the left, we can switch to different views here. Okay, so I ran a $250,000 policy in a 40-year-old male. No lapse guarantee for a lifetime. Columbus Life happened to come in with the lowest price out there. So I said, okay, well, what happens if we put that same money into some other products that we might consider? So I looked at a current assumption UL, in this case with John Hancock. They've got a pretty high interest rate on that product. It performs fairly well for a current assumption UL. I also looked at an index UL, one that doesn't have any guarantees, and said, what kind of cash would we have in there, and what sort of death benefit would we have down the road? And then the fourth option is an IUL that does have a no-lapse guarantee. Now, I didn't run it at the no-lapse guarantee premium, but I included it in there just because that's an option. So on this page, it shows, sure enough, we have the exact same premium going in. I mean, at any age you pick, the premiums are going to be the same or close to the same. I think there's some rounding going on there. You can click on these different tabs to show your client what you actually get for your money here. So let's look at non-guaranteed policy value. Okay, you put the same money into each one. And if you want just the no-lapse guarantee with Columbus Life, you got 15 grand. But look over here at the IULs. Again, same money going in, and now you've got 50 grand inside the policy, give or take a little bit. right? And then, what happens out here at age 80? Well, you have no money in the Columbus Life GUL because you went for the lowest cost that guarantees coverage forever. Okay, that's fine, but look, you still have coverage projected in these other products here. And now in some cases, you have over $100,000 of cash. So this is an option you could present to your client, and this just makes it all come to life, and they can see the lines right down here. Here's the sort of cash you'll have for the same money going in. Some people like to see a return on their money, and sure enough, this shows it to them right there. What happens to the death benefit in these cases? Well, we know that one of these is guaranteed all the way out, and that's the Columbus Life product right there. We've got the $250 all the way. The other products, the guarantees drop off at some point in time at that premium, right? We got North American that drops off here. We've got the John Hancock product that drops off over here, and then Protective down the line, and the Columbus keeps on going. And you can easily switch over to the non-guaranteed death benefit and see what happens. Now, Columbus is going to show 0 because everything is guaranteed. They don't have something that's not guaranteed to show. So that's a little misleading here, but all the others, you can see the death benefits there up at the top. They continue on and continue to grow, really. So this is a real easy way to present that to your client. Look, for the same money, we get you this or we get you this. Which do you want? Or hey, maybe you go with a combination of the two, right? Maybe they go with $250 of each or $125 of each. And now at least they have some options, and this is a real easy way to show that to them. All right, so that's comparing a GUL with some cash value ULs. The second sales concept where I think it makes sense to use this software would be if you have a client who wants a traditional whole life product. And I get these questions from time to time. Client wants the guarantees associated with whole life and the cash values that are accumulating in there. And hey, that's fine. There's nothing wrong with that. Although if you go that route, you don't have the same sort of premium flexibility that you would with the UL product. And we know we can get ULs with no lapse guarantees that are about a third the cost of a whole life. And some of these ULs, if you overfund it or if you fund it to the same level as a whole life product, you're going to have comparable cash values, and I'd argue, and I think I'll be able to show you here, even greater cash values. Again, so this is another scenario where you can just lay it all out in graphic format for the client. Hey, here's the whole life you're asking for. Here's another option I think you might be interested in because it gives you some premium flexibility and a chance to have even more cash growing inside the policy. So in this case, again, I stuck with the same 40-year-old male. I'm going to click over here on death benefit because I don't remember what I started with. And it looks like I started with $500,000. And this is the guaranteed death benefit chart right here. And so with the whole life, we know we have $500,000, the entire client's lifetime. Look what happens, though, here with the guarantee builder. It's North American's IUL that has a no lapse guarantee. We're overfunding it. And now even on the guaranteed side, we have more death benefit at age 65 and 75. I also short paid this as well. I did I think I must have done a 20 pay, a 25 pay, something like that. But it's a short pay scenario. Now, we know with a lot of whole life products, they have dividends which are not guaranteed. The interest rates and interest-based returns and index returns on ULs are also not guaranteed. So we've got an apples-to-apples comparison here. But if we're going to look at what they're both going to not guarantee at age 60, look, the IUL is going to illustrate a little higher. Even at age 80, we don't have quite double the projected cash in there, but we have more cash. I'm going to go back to the guaranteed values, this is something else that I think is kind of interesting to look at too. The internal rate of return on these products now on a guaranteed basis, the whole life is going to look pretty good. On the non-guaranteed basis, I think we'll see that flip. Yeah, sure enough. And this proves what we saw with the cash values earlier, that based on their current values, the IUL is going to outperform the whole life. All right, so that's a comparison you might run for your client. Another type of sale where I think this really works well is the life insurance retirement plan, or some people might call it the supplemental retirement income sale. I titled this one the Roth equivalent because we're taking this 35-year-old male, and at the time I looked up the tax charts, and the most you can put into a Roth IRA per year is $5,500. So that's exactly what we put into these products, and we put it in through the client's age 65, and then started taking loans for the next 20 years. So you can display it on an illustration, and maybe after a while you'll find the numbers on there. I mean, it takes some doing, right? But in this case, you can actually show in graphic format what they're really looking for, and which is what I'm looking for right now, the income coming off of here. Oh, here it is. Okay, now if I can find my cursor, here we go. All right, so we start taking money at age 65. The client wants to know, for the premiums that they put into this product, hey, what are they getting out of it? Well, we can see right now we've got over $275,000 at age 70. By the time we stop taking money out at age 85, we've pulled just over $1.1 million out of either contract. And these are two of the better performing IULs out there, and you can see they're really neck and neck with one another there. So it's really close. But again, this is a way to show your client, look, what do you get for the $5,500 you're putting in? Well, here we go. By age 85, you've pulled $1.1 million out of that, and I'm looking to see if I can show you exactly the premium that went in. Here we go. So we put $165,000 into each contract. Right, that's what they put away. And another mouse click, and we can show that they're able to pull out $1.1 million, and really with either one of these products. All right, and the fourth sale, where I think this might work, is in a wealth transfer situation. This would apply to the folks that they're probably in their retirement years or pretty close, and they've got all the money they need to live on in retirement, right? They've got that income figured out, and they've got some extra money laying around. It's probably in a savings account or a CD at the bank. And if you ask them the purpose of those funds, it's not really for retirement income. They have that money earmarked for their children, their grandchildren, their great-grandchildren, you name it. And they're just going to leave that for them. Well, problem with that is, one, if it's in the bank, they're not earning much on that money at all. Anything they are earning on that, they're paying income taxes on it every year. And maybe it's in a non-qualified annuity or qualified funds. Well, we know someone's going to have to pay taxes on that at some point in time. Wouldn't it make sense to pay the taxes today when income taxes are at about the lowest rate they've ever been, right? We just had a huge tax decrease passed through Congress recently. Why not pay the taxes today? Because we know that tax decrease increased the national debt and the annual deficits. At some point in time, taxes are going to have to go up to cover that. And again, it just makes more sense to pay less rather than potentially more down the road. And on top of that, whatever this asset is, hopefully it grows, right? So there's going to be even more tax due on that somewhere along the way. All right, so that's sort of the concept. How do you sort of display that to your clients so it makes sense to them? Well, we took a 70-year-old gentleman in this case, and he had an extra $100 earmarked for that purpose right here, and I put it into a product with National Western and North American's legacy optimizer. Now, on the guaranteed side of things, these things, they're really not meant to give you guaranteed values. They work well, since they're index products, on the non-guaranteed side of things. So that would be one thing you'd want to show your clients here. As soon as I get to it, I'm trying to find the non-guaranteed policy value. This is the leverage they get on their money. Remember, we put in $100,000 at age 70. In 20 years, we've gotten a $37,000 gain. And really with either product, these two are neck and neck in this case here. What interest rate would you have to get on your money in that 20-year time period to equal this? Well, we can actually show that to the client right here. Look at the internal rate of return, and it's 1.6. I mean, maybe you can get 1.6 at the bank today. I don't know. Last I checked, interest rates are right around 1, give or take a little bit. But is a bank going to project that for 20 years, and then take into account the taxes too? So you're really going to have to get more than that, because you're giving Uncle Sam a good part of that. So again, this is going to be right in there with the best the client's going to be able to find anywhere else. And you can show that to them in graphic format right here. All right, so that's the wealth transfer concept, and I have a fifth concept that I think works well with this software as well. This is what I call the fixed asset alternative. And let me sort of paint the picture for this scenario here for you. We're using, in this case, a 60-year-old, and this person has the same $100,000. But this money isn't necessarily earmarked for the next generation. This is money that our 60-year-old, he's nearing retirement. He has this $100,000. He needs to earn some interest on this, right? But he doesn't want to take any risk. I mean, he's concerned about what the market has done the last few weeks. It's going up and down. We're afraid that as we're getting really close to retirement now, that, boy, what if that tanks? Now this 100K is going to be 70,000 or 60 or 50,000 or who knows what. So we don't want to take any risk with that. But yet, if we leave it in the bank at 1% interest, we're not going to make anything. We might as well put it under the mattress or buried in the backyard if we're going to do that. So what are some options? Well, there are some universal life contracts out there that offer better than bank rates of return and little or no surrender charges. So that puts them ahead of a lot of the annuity products out there. As long as a person's healthy and qualify with underwriting, this may be a good place to temporarily put some of their money. So again, we've got $100,000 going in. I'm going to look at the non-guaranteed policy values here. And we can see between interest and the lack of surrender charges, looking 5 years, we've got a pretty good return on our money. I don't think you're going to see a bank projecting a $27,000 gain on $100,000 in just 5 years. What if we look 10 years down the road? Now we've made an additional $58,000, or if we go with the Bright House product, additional $22,000. What does that mean as far as an internal rate of return? Again, we're going to easily outperform the banks right here. We've got over 4% with the IUL. We've got 2% here with the UL from Bright House. What if we backed it up to age 65? Well, we've got a 5% return on our money. A bank isn't going to give you a CD for 5% right now. Now, what if we want to leave the money in there? What if we decide 10 years down the road, yeah, this is a good place, right? The banks are still lousy, and we don't have the stomach for the stock market. Well, this isn't a bad place to keep your money. And what if you pass away and you never touch this money, right? Well, you do have a death benefit here. If I go over, let's say, age 90, that's probably right at or past life expectancy. Remember, we put $100,000 into this, and if you went with the Bright House product, you would have doubled your money upon death, tax-free. The Rapid Builder shows that you now have over five times the money you put in, passing to your heirs, completely tax-free. Again, it's one thing to show this on an illustration. It's so much easier and faster to have it in this visual format right here. And I forget if I mentioned at the beginning, I mean, you can show this on the computer when you're in front of your client physically there, or if you've done a go-to-meeting session in the past, it's a lot like our go-to-webinar we're doing right now. You can share your screen with the client and walk through this and have a conversation going back and forth. And maybe the client says, well, hey, what is it at age 81? Both my parents passed away at 81. What am I going to have there? Okay, well, you can move the mouse, and there it is. There's the numbers at age 81. And so much easier to see things this way than it is looking through a traditional illustration. So before I open it up to questions, Cody, is there anything you would add to this you can think of here?
No, I think you did a great job. Obviously, these are pre-formulated scenarios that you ran. Of course, all your producers are going to have their own cases here, and whether it's you or us here in our office, we're located out here in San Diego, we're always more than happy to, at least, especially the first few times when you guys have a scenario, you just let us know what the scenario is, and we can help you select these pages that Brian is showing you here today, and we can run them through you so you feel confident in it. Because once you use this tool once or twice like Brian has, you're going to get very comfortable with it, especially in front of your clients.